Alright traders, Forex market, here we go. We got the Canadian Japanese yen under the spotlight. A familiar situation here. Just a few days ago, we jumped the ship, basically. We decided to close out that bearish campaign we had. We got cold feet, to be honest. Price action was starting to turn around pretty aggressively. We did manage to get out with small profits. A couple of times actually. Let's dial it back to the beginning, right? So how everything started here was price action breaking 89.64. We jumped in. As it was starting to turn around, we got out. Took a very small profit on the way out. Nothing close to what we were planning to. And then price action went up. We actually called it out. That turning point. And as price got back down again, we jumped in again. When it was turning around a few days ago, we got out again and also took a small profit on the way out. The reason we were unable to take some significant profit here, guys, is because price action was far from being, far from being in a trend. It was not trending. It was trading sideways. It was very hectic. It was all over the place, right? I think we may be done with that hectic moves that we've seen so far. I think we might be now starting to build up some serious momentum all the way to the target. The reason is this: price action coming from that encounter with 89.64 and then coming off, right? Then coming back up again. We thought it was going to be pushing forward even further, but it didn't. What it did was turning back on the downside again after that meeting with the 200-day moving average. So lots of signs suggest that price action is now going to be all about extending that downside move, right? So let me show you how this looks like from the weekly perspective. It's quite interesting. It's very foretelling as far as I'm concerned. Price action on the way up. Take a look how it was challenging 89.64 from below, got that expected rejection, and now turning back down. So for me, this was the correction. That was the that significant technical correction. We're done with that. So price action should have easy way now to close the distance to the target. Target is of course lower section 86, represented by 86.20. We do believe it has the potential to go beyond and chase the previous lows. That would be 84.50, so another price extension for another 170 pip. Yeah, we might use it, by the way. We might use it depending on the type of reaction we're going to get when price action hits 86.20. We'll definitely terminate that existing bearish campaign that we've just launched and possibly go into another one back to back to try to catch that 84.50 I've just mentioned, but we'll see how it goes. It depends, of course, like I said, on the way price action is going to interact with that 86.20. It should be interesting to see how that's going to work. In the meantime, we've jumped back in a little bit late, I guess. Friday was a big move, had a big drop, but it's better late than never, I guess. We got in with 10K, and if price action will start to build that negative momentum we're expecting, we'll definitely start to push the position much bigger as we go towards the target. 86.20 final destination. We got our stop loss level at 89.40, and we'll leave it at that. We'll come back in a couple of days to pick up the situation, pick up right where we left pretty much. Alright guys, that's about that Forex market. Moving on to the second segment on our program, cryptocurrency market, coming up in the next video.